Hi everyone, welcome back to the channel. I'm Charlie, and in this video we are going to look at how I go about choosing an index fund. Now, if you're new to the channel, here we are helping young people and first-time investors to figure out the world of investing in the stock market, but doing it safely. Now, as a reminder, an index fund buys shares in every company that's in the index they track. Now, that might be the S&P 500, which is the top 500 companies in the United States. It could be the FTSE 100, the top 100 in the UK, or it could be a technology or a clean energy index. The point is that the index creates the list of all the individual companies, and you just need to invest once to own a share in all of those organizations. Now, the reason why we invest in index funds is threefold. Number one, they're easy. We've all got other stuff to be getting on with in our lives rather than picking individual stocks and taking all of that risk. Number two, they are diversified. So without us having to do loads and loads of research, we can easily make sure that we are invested in a wide range of companies. And number three, they're cheap. Because you're not paying for an individual financial manager to pick stocks for you or take the risk yourself, the index funds can be charged out at a very, very low cost to you and to me. So now you've decided that you want to invest in an index. How do we go about choosing which one to use? Now, there are plenty of different indexes focused on countries. That could be an Asia Pacific or a Japan index. And also on industries. Could be a clean energy or a technology index. But one of the most common indexes to start with is the S&P 500. That stands for Standard & Poor's 500, and it includes the 500 biggest companies in America. Loads of the companies that you will have heard of. Nike, Amazon, Tesla, all included in there. It's a really easy way to get invested in the companies that you know and probably use. Now you've decided that you want to invest in the S&P 500. Now we want to go and find some specific funds. Now, this will depend a little bit on the platform that you're using. And we'll talk about that in some other videos. But the platform that you use to buy and sell any shares and funds is going to determine what access to what funds you've got. Now, some common platforms, certainly here in the UK, Trading 212 or Free Trade, will not give you access to a traditional index fund. They will give you access to a thing called an exchange traded fund, and we'll talk about that a little bit more in some other videos. But today we're focusing on a traditional index fund. The platform that we use is called Hargreaves Landsdowne, and that gives access to many, many hundreds of different funds. And that's what we're going to take a look at now. So now let's use the Hargreaves Landsdowne website to find a specific index fund that we want to invest in, the S&P 500. So first off, I've just gone to the Hargreaves Landsdowne website, and I'm going to click on Funds here and Fund Finder. Now here we've got a number of different filters that we can choose. So first off, we're going to look for North America because that is where our S&P 500 is based. Next, I'm going to look for an accumulation fund. This really means that any investments that are paid out, any dividends, is going to be reinvested back into the fund rather than being paid out to us as income. And that's best if we're long-term investors. Next, we're going to look for a tracker. Now, this is the same as an index. It really means that instead of having a human being picking individual stocks and companies, we're going to be following an index. And so that's leaving us with 10 different funds that we can invest in. So let's dive into that and take a look. Out of 3,000, we've now come down to 10. Now, each of these are the companies that deliver them. Fidelity, HSBC, iShares, and they're all essentially doing the same thing. They're focusing and following an individual index. So let's have a look at this one here, the UBS S&P 500. You can see that there is no charge to buy this individual fund, so you're not being charged in order to purchase it. And then here we can see that the ongoing fee each year is 0.09% of what you're investing. Now, if you compare that to an actively managed fund where you might be paying upwards of 1%, then this is a really, really cheap way of investing. And if I scroll down a little bit further, we can see here the top 10 holdings: Apple, Microsoft, Amazon, Facebook, Alphabet, which is the parent company of Google. These are the biggest companies in America. Now, if you're trying to get exposure to some of these companies, because these are the organizations that you know and you use and you want to invest in, this is a really easy way of spreading your investment across all of these organizations. Now, this is the bit where a lot of people get stuck, and this is where they get confused and decide to go back to just picking an individual stock. And that is, out of this list of 10, which one should I choose? Now, the first thing to consider in your choice is that all of the index funds are pretty much going to follow exactly the same companies. After all, they're following the same index. So when we look here at the relative holdings of the top 3 companies, you can see there's not that much difference between these 5 funds. They all hold Apple, Microsoft, and Amazon in essentially the same percentages. So actually choosing one or the other isn't going to give you more or less exposure to each of these organizations. The next thing that we want to look at is fees. Now, this can really influence what we earn over the coming decades. Now, while all of these index funds have got a significantly lower fee than an actively managed fund might, which could be above 1%, there is some differentiation. And when you consider that each of these index funds is going to expose you to exactly the same companies over the coming years, then is it worth paying more for that index fund? Probably not. So here we can see that the iShares North American Equity Index, which tracks the S&P 500, charges just 0.05%, whereas others like the Vanguard US Equity are charging double that, 0.1%. Now, you can make your own decision, but what you might choose to do is to invest in the index fund that's going to charge you the least, because every pound, every dollar that you keep in that index fund that doesn't come out as fees is going to compound and compound over the years to come. So let's take a look at that North American index from iShares in a little bit more detail. We already know that it's going to cost us 0.05%, which is the lowest ongoing charge that we can find. And we know that it is going to be investing in all of the top companies that we know of, Apple, Amazon, Microsoft, companies that we might not be able to buy their shares individually yet. One thing that I always find is interesting is just to take a look at the charts and performance. And here you can really give yourself the confidence that this is going to track the index. So this is the ongoing growth of this fund over the past year or so. And here you can see in orange is the individual fund, the iShares US Equity Index, and in blue is the index itself, the S&P 500, which if I remove that, you can see you're left just with the index. It shows you that this very accurately tracks the index, and it does that by holding exactly the same shares as the index does itself. So there we are. In this video, we've seen how easy it is to choose an index tracker fund, and I really encourage you to spend time to figure that out rather than going into individual stock picking. In this video, we saw that you could firstly pick which index that you want to track. Secondly, just double check that the platform that you use allows you to purchase index tracker funds. Thirdly, we looked at how important it is to check out the fees that you're going to pay. There's no point overpaying on an index fund. And then finally, we looked at how you can find out what the individual stocks and shares that are held within that index fund are, and how you can monitor that that index is tracking correctly. I hope this was useful. We've got plenty of other videos on the difference between index funds and exchange traded funds, and the difference between index investing and picking individual stocks, and I hope to see you over in some of those. If you've enjoyed this video, please share with your friends and click to subscribe. Thanks.